Good evening, ladies and gentlemen. Welcome to the Loan Officer Training Series with the Mortgage Calculator. Tonight, we're going to be talking about how to structure an appraisal reconsideration of value. Give us just a moment here to go live on all the different platforms. Appreciate everybody tuning in. I see you dropping comments there. Appreciate it. Definitely a great topic here to go over. All right, looks like we're live on all the platforms, so we'll go ahead and get it started. What we'll do is we'll take the chat off the screen for now. We'll go ahead and keep dropping comments there in the chat. Also, go ahead and drop any questions you have in the chat as we go through the presentation. Jose would be more than happy to answer them. So, welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our CSO, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every Tuesday, Wednesday, and Thursday evening at 7 p.m. Eastern on the show is a loan officer training, a nice in-depth dive into a loan officer training. Tonight, we're going to be talking about how to structure an appraisal reconsideration of value. So I'll let Jose go ahead and get into the presentation here.
All right. Good evening, everybody. How you all doing tonight? Or those of you that are on the West Coast or in Hawaii this afternoon, or maybe you just finished eating lunch, right? But this is a very important topic because, again, as business activity picks up, right, we may be going more to the extremes in some scenarios, and we may be finding ourselves in situations where the appraisal may come in a little bit short. That's why it's so important to understand the importance of the reconsideration of value as a very good tool, but most importantly, how to structure a reconsideration of value and stay compliant, right? You don't want to start doing all sorts of actions that are going to get you and your license and possibly the company's license in trouble if you go around rattling the cages of the appraisers in an incorrect manner. There is a correct way to structure your reconsideration of value so that it's successful and at the same time being successful keeps you out of trouble. So let's get right into it. There's our happy appraiser, right? I don't know how happy he's going to get when he gets my reconsideration of value, but the important thing is he's not going to get it directly from me, right? And I'll explain that in a minute. The reconsideration of value is a request to the appraiser to reconsider the analysis and conclusions of the appraisal based on information not presented on the appraisal report. Without getting into too much detail on this slide, because I do break it down a little bit further down this presentation, we're talking about comparable sales that the appraiser may have missed, right? That's usually what we're talking about based on information not presented, or possibly adjustments or other things not done incorrectly because the appraiser may have missed details, right? They may have missed that it has a two-car garage. They may have missed a bathroom. Who knows what it could be? Because I've actually had it where they didn't give any adjustments for a two-car garage for a townhouse where none of the comps had garages. That definitely would result in a reconsideration of value. I think I got an extra $5,000 on that one, and that's what I needed to reach the promised land. So, really important to note that the ROV can only be requested by the loan originator or a member of the loan production staff. So if there's like an appraisal department that does it, they can do it. Now, it can never be requested by the borrower. Very importantly, it cannot, which I just alluded to a second ago, it cannot be requested directly from the appraiser unless it is a VA loan. It has to go through the AMC. So you don't go to call the appraiser or email him and says, I need to reconsider the value. Here's the info. You go through the AMC and you put in the request. And then the AMC, the appraisal management company, is the one that then transmits the request to the appraiser with all the supporting documentation. And then the appraiser, when they're done, transmits to hopefully updated, revised, corrected report back to the AMC, who then distributes it to you and the borrower. Now, real important to note, I didn't mention, like you don't want to get a compliance violation, lose your license, get fines, whatever it may be, because you need to abide by the appraiser independence requirements or else risk a compliance violation. We also heard seen as the requirements when we have a file with an appraisal that we're being asked, okay, please upload a copy of the appraisal and the SSRs, the delivery certificate, and for very important for this presentation, the AIR certificate, where the appraiser is certifying that they abide by the appraiser independence requirements. Now, very important to note that the appraisal reconsideration of value is not the same as a revision request, right? A revision request is where there's an obvious mistake, something left out, and you're sending in a request for the appraiser to update whatever was incorrect without affecting the value. Now, however, if we find mistakes or what we think are mistakes that we think affect the value, then that is where the revision request actually transitions to being a reconsideration of value request. So, what are the appraiser independence requirements? Right, there is a sample certificate of the AIR, or the appraiser independence certification. Now I'm going to read what I put in my bullet points, but then we'll go to the form in a minute. So the Fannie Mae appraiser independence requirement sets forth standards to safeguard the independence, objectivity, and impartiality of appraisers and independent parties to a transaction. Right? They don't want happening what they feel was happening pre 2008, before the meltdown that we had, where there was a lot of potentially, they feel that there was a lot of funny business going on between loan originators, loan officers, and mortgage brokers, whatever you want to call them, and the appraisers. No person is allowed to influence or attempt to influence the development, reporting, result, or review of an appraisal through coercion, extortion, collusion, compensation, inducement, intimidation, bribery, or any other manner. Now, this is important to note. I mean, we actually had one deal that I can recall where we had a borrower that met the appraiser at the property to provide access, and this is a borrower that was pretty well-to-do and owned most of the properties in that small little town that the appraisal was done at. And this was an appraiser that was the appraiser that was doing most of the appraisals in that area, right? This was like an island. I can't remember if it was off the coast of North or South Carolina, but it took like a month to get that appraiser out there, right? Wouldn't you know it, when the appraiser goes out there, the borrower's there with his whole list of papers and this and that, and starts rattling figures and numbers and values and all this kind of stuff to the appraiser, basically telling the appraiser how to do their job and what he thinks the property's worth and all this kind of stuff, where it's pretty obvious that he's pretty much breaking every tenet of this standard, right? He's basically trying to induce the appraisal through, it was almost, the appraiser actually, after this, the appraiser actually left. The appraisal sent an email to the AMC, told him what happened, how he was being, it's coercion and intimidation and all this, and attempt to influence me. I'm valuing the property, not letting me do my job. And he basically said, and I'm not coming back here. You owe me a trip fee, and I'm not coming back here. So we waited a month to get that appraiser out there, and then it really messed things up there to try to get another appraiser out there, because in this case it wasn't the MLO, it was the borrower that broke the rules and upset the appraiser. Because notice, and now what the right that we do get is under federal law of financial institutions loan production staff, and this is putting it clinically here, right, may ask an appraiser to undertake one or more of the following. And this is pretty precise stuff. Consider additional appropriate property information, including the consideration, excuse me, including the consideration of additional comparable properties. That's usually what it boils down to, right? Now, one of the recent ones that I had, like I mentioned, it was they just didn't give adjustments for the fact that the subject had two-car garage and the comps didn't. So there were adjustments that were needed. So that was the correction to the information. Bullet point 2, provide further detailed substantiation or explanation for the appraiser's value conclusion. This is stuff we're asking the appraiser to do. And bullet point 3, correct errors in the appraisal report. Now, mind you, these are errors that we feel will affect the value, not like you did a typo or the address is wrong, you got the wrong borrower's name, you got the wrong loan number, you put it vacant and it's occupied. Those are errors that don't affect the value, but we're talking about errors that affect the value, And if you read the appraiser independent certification there, it breaks down a few of those things, right, on things that we can't do. And notice number 1, that's why the appraiser gets paid up front before he goes out on these deals, on everything except the VA, right? The VA, they go out and then we send them the payment. But number 1 is really important, because we cannot be threatening the appraiser, withholding or threatening to withhold timely payment or partial payment for any appraisal report because we're not happy with it, right? Withholding or threatening to withhold future business with me, or demoting or terminating or threatening to demote or terminate me, right? So those are, and then like the inducement part, right, or bribery, conditioning the ordering of my appraisal report or the payment of my appraisal fee or salary or bonus on the opinion, conclusion, or valuation to be reached, or on a preliminary value estimated requested from me. So these are certifications that the appraiser gives in his appraiser independence certification. I'm not going to go through all of them, but you get an idea of where we're coming from. This is a very hands-off process. Can't get emotional about it. You can't call the appraiser and tell him, you don't know what you're doing, yada 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 yada, because you cannot reach out directly to the appraiser, period. The only appraiser that you can reach out to directly is going to be on a VA loan, because for the VA loans, we order those through the VA LGY portal, initially ordered through there. And then if you need a reconsideration of value or a revision, there is no reconsideration of value or revision button in the LGY portal. You have to just reach out to the appraiser, explain what you need, and they'll tell you what they need from you, and you send it over, and then they review it, and maybe it works, maybe it doesn't. But every other deal, it's very hands-off through the AMC only. Everything is communicated to the AMC according to the procedures that AMC may have. Every AMC is different, is a different entity. They have to follow the standards, but they may have different procedures for the process. So that segues us directly into the reconsideration of value form. Now, this is a form for one of our AMCs that I took off their name because I wanted to make it generic. But note, there is no generic form, right? The form is going to be specific to each AMC. And an AMC, for those of you that may not be aware, can't recall at the moment, is the appraisal management company, right? That's a company you put the order to, and that's a company that then submits your order to the appraisers that they have in their system, then an appraiser is going to pick up the order. They don't usually directly assign it. And then in this case here, each of the AMCs is going to have their own reconsideration of value form. Now, important points to consider in the reconsideration of value process and form is its limit to one appraisal dispute or reconsideration of value request per report. A limit of 4 quality alternative sales, the comparable sales that you're putting forth, no more than 4, and try to get all 4. Now, notice on that form here is that it has MLS number as the source. Hopefully, that's where you got it from the MLS. Do not reference a final dollar amount of the market value or a range of the values desired in the form. And talking about the MLS number, provide verifiable sales and sources. So if you're using the MLS as a source, like if you reached out to the realtor, which I'm going to get to in the next slide, and they gave you the comps, they're going to hopefully send you the listing brochures. Listing brochures is going to have all the information you need, including if the source is the MLS, you're going to put the MLS number. If the source is a closed sale, you're going to put source tax roll, right? If it's not a realtor sale, the date that it was sold, the address, right? Bedroom, number of bedrooms, number of bath, gross living area, the distance or proximity to the subject, and any comments as to why you feel that sale is more comparable than those sales in the report. And you got to put that for each of these. One of the reasons you're going to put is that it's a model match. I was able to have successful reconsideration of value here because I saw that my subject was a 3-1 with a carport. And the appraiser, I don't think, they don't always look very thoroughly. Remember, they don't get paid that much for an appraisal. They're not going to spend 5 days, 4 days, 3 days, not even 3 hours looking for comps. They're going to look at the after they measure the property and take photos, and they're going to look at some comps, take a few minutes, grab the comps. But in this case, I was able to find comps that were 3-bedroom, 1-bath with a carport. That was a model match, just like the subject. The model match means it's just like the subject that the appraiser didn't find. And I found another one that had closer proximity to the subject than the ones that the appraiser found. And I think I was able to get like an extra $10,000 value because I provided better comps that are, but I'm going to get into the avoiding pitfalls. But again, closing statement if using non-MLS sales. Now, common pitfalls, right? As we were talking about the information on the form, common pitfalls that you want to avoid, and I see this happen all the time. Do not provide comps that are already on the report, because that's one less comp that you're going to have to include that they're going to consider for your reconsideration. Do not provide comps with larger square footage differences than those utilized by the appraiser, right? You want to be as similar in size to the GLA, gross living area, of the subject as possible. Just to provide a bigger comp because you think it supports the value after doing adjustments, the lower percentage of an adjustment per category, the better the appraisal is. So if your comp requires the appraisal to adjust a comp by 15 or 18%, whereas the one with the gross living area closer to the subject requires a smaller adjustment, then the one with the smaller adjustment, if proximity is the same, is the one that's going to be used. Here's one that catches people all the time. Providing comps close after the effective date of the appraisal report, which means obviously that every comp that you provide has to be at or prior to the effective date that appraisal report was signed and delivered. So if it was July 15, 2024, the signature date on the appraisal, your comps that you provide have to be July 15th or prior close date. Real important. Now, another one here is a common pitfall is providing comps outside of the subject's market area, or comps further in distance than those already utilized, as the appraiser cannot overlook homes in the immediate market and will only look in similar markets when no comps are available within the immediate market, right? You cannot get selective and omit comps that are better than the ones that you pick just because you're trying to reach a value. That doesn't work, and that's what they mean by it. So the proximity is further than the comps that the appraiser used. They're not gonna accept those. That's now in my case, I actually found comps that were closer in proximity, and I was able to get the value bumped up that way. And this is gonna be like roulette, right? Hit or miss. But usually what happens, like I mentioned, the appraiser doesn't take as much time as you're gonna take because you're probably making 10 times what the appraiser is making on the appraisal. Or if it's a nice juicy loan, you could be making 20 times, 30 times what the appraiser is making on, you as a loan officer, compared to what the appraiser is making on the appraisal. They don't get paid the full amount of the appraisal fee. They get paid a piece of that. The AMC gets a piece of it, and the appraiser gets a piece of it. So you can understand why ROVs are worthwhile, at least for you to look for the comps and see, because the appraisers are human. They're not taking that long looking for comps, and they could have made a mistake. So that's really important there with the comps that you are using. Now, here in our final slides, what are the recommendations of a successful reconsideration of value? Well, first one there has multiple benefits. First, reach out to a local real estate agent or borrower's agents and request the comps. Now, if this is a purchase and the borrower is working with an agent, it's going to be pretty easy for you to get the comps. Or if it's a refi and the borrower has the info for the agent that sold in the property, hopefully that agent will respond and you can reach out to them and you can ask them to provide comps, because they're going to give you the best comps. They have the market knowledge. Their comps are going to have the MLS ID, and the realization. The reality of this situation is that in some markets, the local MLS board does not share the data feed. So you're not going to be able to go like into some of the programs that pull comps from the MLS and get comps. It's going to be like zero information. So if you can't get the information from a realtor, you're not going to get the best comps, right? So you're going to work closely with them, with the realtor, to ensure the quality of the comps. But the reason I mentioned this is like a multifaceted situation, because this is also a great opportunity to establish a business relationship with this realtor who you're asking them to do some work for you, but you're also going to talk to them about how you're always looking to refer pre-approved buyers to their market. You can, refer them this pre-approved buyer, right? They don't have to pay for the lead or anything like that. In this case, it's like they're getting free business, because you know what they say, you have to give to receive. So hopefully you'll have some pre-approved buyers to offer them. Maybe not right away, but you're going to tell them that's how you want to work, and then establish the relationship so that then they're going to be more responsive to your request now for comps. And then so that also once you do start sending them some referrals, you're going to establish a referral relationship with them where they also are going to send you referrals for business. So you can see how anytime you reach out to a realtor for any need should always be an opportunity to try to establish a business relationship, and let them know that you're always looking to refer pre-approved buyers to their market, and they're obviously going to be a lot more responsive and attentive to your needs. So in a nutshell, for the most successful ROV, you want to obtain comps that are closest in proximity to the subject. I think you could, came to that realization from my explanation in the previous slide, that are similar in gross living area to the subject, right? The gross living area square footage. that are similar in bedroom and bathroom count, that are similar in design and style. Again, we're in bedroom bathroom count. We're talking about, you're not gonna get a three bedroom one bath house and have a 5 bedroom 3 bath or a 4 bedroom 2 bath as a comparable sale. It just doesn't work because there's probably 3 1s or 3 2s or 2 1s that would be used instead, and the appraiser would adjust for one bath on the one side or one bedroom on the other side, assuming that the gross living area is similar, because there are limitations to the percentage of the adjustment per category and the percentage of total adjustment per property, right? So there are limitations. That's another reason why it just isn't going to work. It doesn't make sense, but it just isn't going to work. And I see it all the time, like with realtors sending it. Yeah, but look at this one here, and they send me a 2,400 square foot house, 4 bedroom 2 bath, because it's in the same neighborhood, and they're like, well, yeah, you can just adjust for the square footage and adjust for the bathroom covers. That's how the realtors are used to doing it when they're doing their market analysis. But they're doing it as part of market analysis to sell a property. They're not doing it to meet whatever are the guidelines and requirements set forth on how to appraise real estate. There's guidelines on how an appraiser is supposed to do their job as well. Similar design and style, what we're talking about there is you're not going to get a 1950 home, right? And say that a 2010 or 2015 home, where they may have gotten in that neighborhood and knocked down the 1950 home and built a new home 8 or 9 years ago, because that's going to be I mean, yes, the 1950 home could have been remodeled, right? It's dressing it up, right? But it's still going to have usually smaller bedrooms, smaller closets, smaller kitchen. Usually not going to have a family room like the newer homes have. Probably not going to have a garage. I mean, it's just, the home styles have changed so much, especially with those components of the size of the kitchen, having a family room, large closets, right? Seems like in 1950, people had like their Sunday clothes to go to church and their work clothes, and that was it, right? You see these little tiny closets, and now in the newer homes, even a 1,500 square foot home, standard 3-2 is going to have a walk-in closet in the master bedroom, and a lot of times have walk-in closets in one or two of the other bedrooms. So just you got to look at the design and the style of the home, and you can't force the appraiser to use a 2015 comp if there were 3, 4, 5 comps from the 50s and 60s that were used, just because you're trying to push the value, even if it is right next door to the subject. It's just not going to be the same, because if the other ones are in close enough proximity to count, then that's really what they're going to look at, right? Your comps can be no more than 6 months out unless there are no other options similar. Um, you got to have similar options like pool, garage spaces, carport, covered terrace, and decks, or there's going to have to be an adjustment. And then you're faced with a scenario of, if the total net adjustments exceed a certain percentage, I can't remember right now if it's 20 or 25%, then it's no good. And also similar property condition or an adjustment is required. If the MLS says that the comp was totally remodeled and yours is not, then there could be a 10, 15, 20, $25,000 or more, depending on the size of the home and the extent of the remodel, for the, down on the value of that comp to adjust for the reconditioning to bring down the value more to the condition of the subject. And I actually wanted to touch one point here on this prior slide here about providing comps outside of the subject's market area, right? Now, that's really important, because I can give an example here in my local market. Again, I don't just do South Florida, but a nice prime example in my local market here. Right by where I live, there's a very exclusive neighborhood called Pinecrest, where your minimum property value for us, and all the homes have at least a 15,000 square foot lot, where the minimum property value of a home is going to be like 1.8 or $2 million, right? Then you got Highway 1, US Highway 1, which is the east, which is the west perimeter, the west boundary of Pinecrest, right? So you got US 1, just directly east of US 1 is the beginning of Pinecrest, and west of US 1 is another neighborhood that's not Pinecrest. So the neighborhoods are divided by US 1, which is the boundary basically, and it's one block, 1 or 2 blocks. You go one block, you're in Pinecrest, and one block, you're not in Pinecrest. So back in the days before they got really strict on these appraisers and the appraisals, it was common for that where the appraiser would grab comps from Pinecrest when they were appraising a house not in Pinecrest that was only 2 blocks away, and due to the proximity, it's only 2 blocks or 3 blocks, it would seem like it was a good comp, right? But unfortunately, it was a totally different area, and they were basically inflating the value of the property by using comps that were outside of the market. So the market could be as little distance as just 1 block, or crossing the street basically is a totally different market. And the appraisers know. And then you have to be aware, and your realtor partner has to be aware, if they're sending you comps, they got to be aware that they're not sending you comps in Pinecrest rather than in the other neighborhood, just because it's 1 or 2 or 3 blocks away, and then you're sending those to the AMC, and then they're going to be shooting you down because it's a different market, totally different neighborhood. It's not going to be applicable. And I mean, really, in that scenario, they would not accept it usually in any scenario, because there's going to be such a disparity in the value of maybe 30, 40, 50% for the same similar square foot house with the same similar square foot lot, just because one is in Pinecrest, which actually Pinecrest is its own village, and the other one is right across the street in unincorporated Miami-Dade County, right? Block away. You could say it's almost the same neighborhood, but it's not once you start peeling the onion. So don't get into those pitfalls. Make sure you work closely with the realtor to give you good comps, or make sure if you don't have any realtor to provide you comps, just do your due diligence and your homework to get as good a comp as possible. You may want to reach out to realtors once you have your comps to discuss if they could give you any insight to make sure that you have a successful reconsideration of value, and hopefully save that deal.
All right. Thank you, Jose. I actually don't see any questions here. Some comments, but no questions. Okay.
I want to add something, you guys. Just remember the appraiser is your partner, right? You can't be antagonistic and stuff. Like Jose said, you always got to be professional. But remember, they're a professional as well, so you got to make sure you treat them as such and present a professional ROV, right? So all of Jose's tips are great, but just treat it professionally and don't make them the enemy. Because remember, if you say, hey, you're wrong, someone's natural reaction is going to say, no, I'm right? So we're working together to find stuff that may be less accurate, right? We're not saying you're wrong, right? Just stay away from that, because it never ends up going in our favor, right?
Absolutely. They're not trying to say, hey, you don't know what you're doing or anything like that, because that's going to end the conversation very quickly. And they may feel that it's coercion and then report you, right? Report your license, and then you're going to have to do some explaining.
All right. Thank you. Okay, let's go ahead and wrap it up then. Remember, we do this every Tuesday, Wednesday, and Thursday evening at 7 p.m. Eastern. So the next time we will be seeing you will be next week on Tuesday, 7 p.m.